May profits be upon you. Welcome to another weekly market forecast. We're looking at the NASDAQ 100, the NASDAQ. All right. And we are looking at it from a futures perspective, of course, because I trade futures. And it's basically the same looking chart as the FX brokers, right? So let's look at NASDAQ, shall we? On the weekly, you can see, hey, I apologize for how I sound right now. I'm under the weather, have been for several days. I'm just trying to get some information out this week. So I thank you for your patience and your support. Now you can see we're making higher highs, higher lows, higher highs, higher lows, higher highs, right? Each time we're breaking structure to the upside. So the uptrend is still intact. All right. Now we've had some bearish days, right? We had a bearish, nasty period there for about a month, a little, 3 weeks, bearish candles. And then, price didn't do anything, it was just moving sideways, moving to the side. Then a couple of weeks ago, we got this where price swept the high of this consolidation. All right. That was pretty cool. All right. That was pretty cool because it signaled that sweep signaled that and with the return back into this range signaled that we may be in store for some bearish price action. Not to mention, if you look at the Dow, you can see there was a huge discrepancy here. Look at this. Oh man, what am I doing? Look at this divergence. We had these down candles, then we had the up candles, boom, and we had all-time highs being reached on the Dow. But with the go to off, come on. But with NASDAQ, it was just the opposite, down. Got it? That's something we look for. Smart money technique, SMT. This is a divergence. And it would appear that the bears seem to be in control. It took control. And I'm thinking that because ES and rather the S&P and the NASDAQ were heading down, I'm thinking that you're going to see a drop in the Dow coming up this week. Now, look at this. Look at this here. This is the week that ended last week, right? It is within the high and low of the previous candle range, right? Let me get rid of this. So, it is an inside week, right? An inside bar, if you will. And the fact is that you don't price. I look at that wick, right, and I say if price goes below the 50% of a large wick like that, when there's a small body and a large wick, if price trades in subsequent candles, where am I looking? Where am I looking? Right there. If it goes below that and closes below that 50%, that would be a very clear bearish indicator, right? And you see that price closed towards it. We dipped below it and then pulled back, and we're right around 40% of this candle ranges, this wick range, right? If the and we close, something to note, we close below the close of the previous candle. We're within the range, yes, but we close bearishly, and that in itself is not a bullish indication, but a bearish one. And we're touching on that 50% area. All right, so with two bearish weeks closed in successively, sheesh, uh, it looks like we might be seeing some carryover into this week. Now, let's go to the daily. I'm gonna show you something. You see this white strip I got there? This is something I marked weeks ago. It's the price gap. All right. It was an opening price gap. You see it opened here, pulled up, and then pushed down hard. And so it started a down move. All right. And since then, we've seen some recovery, partial recovery, but we pulled up back to that same price gap, that volume imbalance. And price won't let it get any higher here. You can see it. Boom, 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 boom. All right. 4 candles in a row. Stopped at the same area. Look at Thursday's candle. Broke below. Look like this is a shift in the market, a market structure, a market shift from bullish to bearish. And I should also note that if you put your Fibonacci retracement tool from the top, if I can get it, to the bottom of this range of this bearish leg, pull it over to the side, you will see that we retraced 50% back into the range of this bearish leg. All right, this is premium prices. This is discount prices. You take your shorts from premium, you take your longs from discount. If you had, we came close to that 618, which is the OTE levels. We could still go back up there. There is a bullish case to be made that we may correct back into the premium prices for a bigger discount to take down. All right, for a not a discount, but a better price to take down. All right. All right. But what I want you to make note of is that we are past the 50. You saw it had trouble getting past this. And then we had this aggressive candle here on Thursday, followed by a doji on Friday. I want you to make note that we also have a bearish fair value gap right there, right? And the market could use that to pull back into and then reach. Excuse me. Oh, I'm gonna make it. I'm gonna make it. Doggone it. All right, we're gonna look for the price to pull back into it, or possibly pull back into it and continue down. But the fact that we are displacing to the downside is a bearish indication. All right, the fact that we've already tapped into the we've already tapped into the 50% area, the premium prices, and then we had this drop. That is some I'm bearish. I'm looking for sales, and I would be looking on the lower time frames for the market to give me a sell model from here down to these lows, which are relatively equal lows. Why did price stop here and here? Where does this golden line? All the way over. It's marking an order block. And price moved away from it, came back to it, found support here, mitigating this order block here, mitigating it, moved away, and came back again to the exact same point, almost to the pip, right there, and pushed up higher. I'm looking for this to fail. I'm looking for this to fail. I'm looking for the market to come back here and sweep these lows for the sell side liquidity. And then we may see another push higher. All right. If we go down to the 4 hour, can we get any clearer insights? Let's see. All right. Let me move this. And what I want you to see is this drop here was fairly aggressive. That was an impulsive move past this low here. All right. I like the fact that we have a low that's intersecting this fair value gap. This fair value gap is not drawn right anymore because that's on the daily. Just understand that. Remember, that was drawn on the daily. This is on the 4 hour, right? We have 4 hour. Oops, I didn't mean to do that. Here we go. 4-hour fair value gap here between here and here. The market came right up to it and dropped from it. All right. Could we see the market continue to go back up into it? Sure, we could. That could, the market does what it wants. That could always happen. All right. Uh, but I am bearish. All right. I'm looking for this to continue. We may see a move back halfway into this candle and then further down. Where right, you see this that line here. Remember that line? That was from the higher time frames. This is the wick that came down here. I said if we go past and close past that 50%, it's going to be some a very bearish indication and a clear indication that we're going to head towards these relative equal lows here, right? So I am definitely looking for the sell model. It could happen at any point, but I'm looking for it to happen somewhere around here. I'll be looking for it on the 15-minute, the lower time frames. All right. So let's see how the market handles this fair value gap on the 4-hour, which is intersected by this internal low here. I like that as a confluence for bearishness, a confluence of resistance here. We found resistance. You see the market responded to it, so I'm thinking that we're probably going to be going lower from here. All right, so I'll be looking at the open and seeing if we can get back up in here to sweep this high for maybe some buy side liquidity before the move down. All right, it could happen from here. It could happen from here where we push down further, breaking this. Oh, sorry, breaking the low on this candle. Let me mark it for you. All right, we could break the low for this candle. We may get another bearish candle like that, and that would form an order block. I'd be waiting for a price to pull back, and that would be an optimal trade for me to take to the downside. That would be awesome. All right, so those are the two things I am looking for. The two bearish scenarios. If I can do this, let me see something here. Boom. I didn't do it. That failed. All right. Okay. Let me try it. Let me try it this way. Okay. Thank you. All right. It's just not gonna happen today. All right. So I'll draw another one. All right. I'm looking for the price to push up this way, like so. All right. All right. That's if we get this this move down below this bullish candles low and a close below that low. If I can, so they could perform form a change in change in the direction, a change in a state of delivery. I'm sorry, change in the state of delivery. All right, and that's what I'd be looking for. Boom, boom, boom. Or if it comes up here to sweep this high, boom, 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 boom. That's what I will look for if the market breaks this high. If we reach these highs, if we break this fair value gap and it reaches these highs up here, I'll be looking at a bullish scenario then. You understand? All right. I hope you enjoyed this video. Hey, I put out some videos already today. Go check them out for gold, for US dollar, Canadian dollar, USD CAD, the pound USD, the euro USD, and the US dollar index. I put out an analysis for it already. Go check it out. I will see you in the next video. Thank you for watching. I'm putting up oil next, so you might want to tune in. All right. See you in the next one. May profits be upon you.